Well, hello, traders and investors. My name is Roger Scott. Today is September 14th. The month is essentially halfway over. We've got a lot of Fed data. We've got a lot of news this week. It's a Monday morning. What do I always say? Let's get into it right now. Now, the week is going to pick up kind of slowly, in my opinion, because we have the FOMC announcement on Tuesday. Typically, as we head into FOMC announcements, the market gets a little choppy because we don't know which way the Fed's going to go. We don't know if they're going to do anything. And in this case, I doubt there's going to be much action. But we do have the meeting beginning today, and we have the results tomorrow during market hours at 2 p.m. And then at 2:30 Eastern Time, our beloved Fed chairman, Jerome Powell, is going to talk. Man, this guy, I don't know if you guys know how I feel about him, but this guy, I'd love to play poker with him. He can't hold anything close to vest. Another major report that's coming out Tuesday is retail sales. Why is it a major report? I've told you guys many times before, 2/3 of the GDP is represented by retail sales. Another major reports we have next week is housing starts. Housing starts have been really strong, and it's been causing stocks related to housing market to rally as well. Jobless claims have been moving lower and lower. They're now at or below their 4-week moving average, and it'll be great to get some manufacturing news. But those are the big reports of the week. We got industrial production, we've got retail sales, obviously the Fed announcement, but I don't think they're going to do anything to interest rates. Housing starts, jobless claims, and Philadelphia Fed manufacturing survey. I'm expecting volatility and volume to pick up as we head into the announcement. So don't expect a major volatility to play into the market today, because a lot of large hedge funds, as well as retail traders, are going to be in a wait and see mode. In terms of jobless claims, to give you an idea of what we're expecting, the 4-week moving average has been right below 1 million. As long as the expectation is 850,000, 830 to 895, as long as it's below the 4-week moving average, we should be okay. Now let's talk about global data. Global shares, well, they are up overnight. Continued period of increased volatility as traders await cues from central banks later this week. And that's going to be another pause, not just the FOMC. Central banks' decision this week is going to be big. If the central banks and Fed decide to put more money into the market, we may see another rally. Japan's Nikkei 225 gained a little bit after Japan ruling Liberal Democratic Party picked a new leader starting today. As a matter of fact, you might have seen it today. Yoshihide Suga. That's Yoshihide Suga, set to take over today. So that's going to be big, because Yoshihide Suga, now the government spokesman, has said he will continue Shinzo Abe's Abenomics policies of easy lending and deregulation. We will see if that happens to be true. Federal Reserve Open Market Committee meets this week. That's the FOMC. The U.S. Central Bank's massive aid for the economic has helped underpin the market's recovery. It has, big time. From the COVID downturn by slashing short-term interest rates to record lows and buying up bonds like there's no tomorrow, giving us a lot of liquidity and making stocks go up, maybe even a little bit artificially, but we won't talk about that now. The Bank of Japan is also due to hold a policy meeting this week. No change is going to be happening, especially after Mr. What's his name? Yoshihide Suga said that Abenomics policies of easy lending and regulations will continue. Well, there you have it. Analysts expect swings to continue to rattle markets for weeks, if not months, as investors wait for more clarity on several key issues. At the head of the list of uncertainties is what to do with big tech stocks, very true, which critics have long said were due for a slide after soaring too high throughout the summer. I'm one of those critics. Not just tech stocks, but health and tech stocks and consumer discretionary stocks, but mostly big tech, which is also partly consumer discretionary. And also, keep in mind, we are now entering the presidential election. And last time we had a presidential election, we had a really volatile summer, and then as soon as the fall hit, it was just very choppy, low volatility, because we have so much uncertainty. We have a very polar opposite election. We got one guy going this way, one guy going this way. It's like so they have nothing in common. They don't agree on anything. So we've got a lot of things going on. Now, in terms of the overall stock market, I want to show you something because we just talked about techs again. These are the 10 major sectors. In terms of the month-to-month gain, basic material, consumer discretionary, consumer staples, and industrial, and then you have technology. So technology has been cooling off, and now consumer discretionary is not in first place. It's in second place. And basic materials, I hate to say I told you so about 2.5 months ago, basic materials are taking first spot. Now, if you look at the average still has consumer discretionary first, technology second, basic materials, and then consumer staples. Now, basic material and consumer staples are as defensive can get. Consumer discretionary and technology are as speculative can get. On a 1-month basis, basic materials already overtook everything, and consumer staples is already in third spot, not even in fourth spot. Now, consumer discretionary, if it drops out of second spot, you're going to see this average drop with consumer discretionary meeting technology a little lower. But I do believe basic materials and consumer staples are going to be taking consumer discretionary and technology in terms of the first spot. Now, today is Monday, and we're having a 90-day breakout on several stocks, but I've picked 6 stocks for you that I'm really liking right now, and I think they're going to be up for a big move. And guess what? None of these are tech stocks. So first, we start with Darling International, DAR. Notice we've been moving up, but now we're moving sideways near all-time highs. If you look at profile of this stock, you will see food miscellaneous, fats, oils, foods diversified, 200% 5-year gain. This stock is looking really, really good. Look at earnings per share growth versus previous year, 143%. And technically, I like this stock. And let's go a little further. Let's go 5 years. Oh yeah, all-time highs. I love it. 1-year high. And I love the fact that it's going higher. See, this is what I love. Vertical, horizontal. Vertical, horizontal, vertical again. That's the 2 waves that I see. I know that there's a lot of guys here who listen to Elliott waves and Gann waves and all this crap. I've only been doing this for a little over a quarter of a century. And the guys that I talk to have been doing it for 40 years. And no one I know who's successful trades these Gann lines, Elliott wave lines. But I'll save that for another day. The bottom line is, I like stocks that are going through a congestion near all-time highs. That means there's a good chance they're going to change their trading trajectory, and instead of moving horizontally, they're going to start moving vertically. This is a really good example. Horizontal, vertical, horizontal, vertical, horizontal, vertical. Put a little question mark here. That's the first stock. Again, nothing to do with technology. Next one, Workhorse. Tom Busby also loves this stock. He's been bullish on this stock. If you look at the profile of this stock, what do they do? Auto original parts. Used, and look at the 5-year return, 383%. 3-year return, 747%. I mean, this is a stock. The year-over-year performance fundamentally isn't on par, but technically, man, oh man, look at this stock. That's a 1-year price. Look at 9-month. Look at 6-month. And again, sideways, vertically, horizontally, moving vertically again. WKHS. First one was DAR. I like this Workhorse. Third one, everybody knows Nike. Nike is a leader in sports shoes. What do they do? Shoes, related apparel, rubber, footwear. Who doesn't love Nike? I mean, who does not love Nike? Fundamentally, technically, it's looking great. And it's one of the few stocks that are in the consumer discretionary sector that continues to make all-time highs. A lot of people are buying Nike online right now. And when people are going back to the store, they're buying Nike. I love the stock. It's making all-time highs. What's not to love? And it's showing us that brick and mortar stores are actually making a slight comeback, because that's where you buy Nike, brick and mortar and online. Amazon actually made a deal with Nike. They didn't know about this COVID. They made it a little bit before COVID, but they allowed to sell Nike stocks as a retailer, official retailer. And that put a big... that deflated the shares of those brick and mortar stores that relied on Nike, because obviously Nike's a big brand. But I like Nike stock, and I like how it's not really congesting too much, but it's having a slight volatility adjustment. So buying it between 110 and 118 may not be a bad idea. Next one, ADM, Archer Daniels Midland. Is it a tech stock? Of course not. Consumer staples, agricultural, fats, oils. Notice these fats, oil stocks are doing well. Earnings fundamentally, earnings per share versus a year ago, 41% fundamentally. The stock is, let's take a look here. And again, some of these stocks are looking well fundamentally. Some of these stocks are looking well technically. Usually I like to see both, but sometimes I'll just go for the technicals. I'll never go just for the fundamentals. But if the technicals look good, I'll go for that. Now, why do I like this stock? This is a 9-month chart. It's just now trading above the previous high set in February. And I like the fact that it's breaking out gently out of these levels. Again, vertical, horizontal, vertical, horizontal, vertical. I like how it's trading, and I like how it's having a round top. I like how volatility is low, and I like it at the current price. And I love the fact that it's not related to tech or consumer discretionary. I know we have Nike, that's a consumer discretionary stock, but Nike is Nike. It's a leader. So ADM, don't confuse this with AMD. AMD is a chip stock. This is not a chip stock. This is a agricultural operations, fats and oils, okay? So pretty boring sector where you should be right now. Next, no needs, no introduction. Caterpillar. Look at the profile of the stock. What kind of a stock is it? Construction, machinery, industrial. Very solid stock. Technically, 5-year return 114%, beats the S&P 500 by about 3-1. But if you look at it fundamentally, again, this is the February high. It looks like it just started breaking out. It's just now above the February high, and it looks like it's congesting at these levels. And again, I like defensive stocks right now, and Caterpillar, KAT, is definitely a defensive stock. Last one, BMCH. BMC Stock Holdings. What did they do? Let's take a look. Retail lumber, building, retail, lumber. 5-year return, 179%. Earnings per share growth, previous quarter, previous year, looking really good. Lumber prices just tripled. I mean, things are going really crazy for industrial and building stocks. So whenever you're residential real estate is going crazy right now. People need lumber, folks. Look at this stock. It's a defensive stock. It went, look at this, vertically, and now it's consolidating horizontally. And if it takes out the high, about 42.42, I think it'll break out again. So we got DAR, Darling, we got Workhorse, we got Nike, we got ADM, we got Caterpillar, and we got BMCH. And those are the stocks that I'm looking for a breakout this week. Now, don't go anywhere. I've got something really, really hot for you. In case you haven't heard it yet, there's a new stock that just crossed the alpha line. That's right, the alpha line. And Wall Street veteran Adam Sarhan says it's his number one, that's right, number one stock of the year. Adam's alpha trades are known for soaring in 24 hours, sometimes 2 days, sometimes 3 days. No day trading. We get in on Monday, we get out on Tuesday, we get in on Tuesday, we get out on Wednesday. No day trading, 24 hours, 48 hours, 72-hour explosive gains, giving you the potential to see gains like 1,246%, 2,422%. Not only is he ready to give you the number one stock to act on immediately, but you can also have a chance at winning $1,000 in cash. I love it. Today, win $1,000 in cash. Pretty good, right? All you've got to do is click on the link below to register and then show up this free event Monday, that's today, September 14th at 1 p.m. Eastern Time. 1 p.m. Eastern Time, Adam's going to show you everything. 1,246%, 2,422%, and I'm going to be there as well. Don't miss this. Folks, you cannot afford to miss this, and I'll talk to you guys later. Bye, and have a great day.